This week, we're going to shift gears a bit and attempt to have an intelligent discussion just amongst ourselves, the co-hosts on Security and Compliance Weekly. Our topic today is cyber insurance. What is the place of cyber insurance in terms of cybersecurity? Is it a substitute or is a supplement to compliance programs? How much does it cost? Is it worth the investment? We're going to look at some recent case studies involving cyber insurance claims. And in our second segment, we are actually going to continue the discussion because there happen to be a lot of cyber insurance news stories this week. So join us for this discussion as we tear down silos and build bridges on Security and Compliance Weekly.
This is a Security Weekly production. And now, it's the show that bridges the requirements of regulations, compliance, and privacy with those of security. Your trusted source for complying with various mandates, building effective programs, and current compliance news. It's time for Security and Compliance Weekly. Today's organizations face an evolving set of security threats and continually changing compliance requirements. As your business grows, privacy concerns only multiply and add to a dynamic set of priorities. Today's organizations need to integrate risk, security, and privacy into a cohesive program. Online Business Systems team of seasoned security practitioners work closely with you to assess your security posture, policies, procedures, and technologies, providing tailored solutions that are specifically aligned to your business's risk profile and ultimately ensure the protection of your brand. To learn more about Online Business Systems, go to securityweekly.com/online.
Welcome to episode 15 of Security and Compliance Weekly, recorded on January 28th, 2020. I'm your host, Mr. Jeff Mann, coming to you remotely from Pasadena, Maryland. Joining me today are my co-hosts. First from G Unit Studios is Mr. Matt Alderman. And remotely, we have Scott Lyons and Josh Marpet. Welcome, gentlemen. Hey, before we get started, I have a few announcements. Join us at InfoSec World 2020, March 30th through April 1st, 2020 at the Disney Contemporary Resort. Security Weekly listeners save 15% off the InfoSec World Main Conference or World Pass. Visit securityweekly.com/ISW 2020. Click the registration button to register with our discount code or the schedule button to sponsor a micro interview. Also, attend RSA Conference 2020, February 24th to 28th in San Francisco. If you visit securityweekly.com/RSAC 2020, you can sign up to sponsor an interview with us on site at the conference, or you can register and use our code to save $150. Okay, let's get started talking about cyber insurance. I thought maybe to start off with, to sort of frame the conversation today, Josh, I was going to lean on you since you were the one that suggested, hey, sometime we ought to have a whole segment on cyber insurance. Could you just kind of frame things out a little bit? Tell us about what cyber insurance is, what it's all about, and why we care about discussing it today.
Yeah, but I need more than an hour. So
keep it short.
Cyber insurance is fascinating.
I want you to explain. No, wait. That would take too long. Let's sum up.
Paraphrase, perchance.
Okay.
Cyber insurance is what you use for the aftermath of a cyber incident, just as your auto insurance is for the aftermath of an auto accident. This is not a hard concept. The problem, of course, is that the devil is in the details. Corollary, everything's a detail when it comes to cybersecurity. So you've got cyber insurance, which you pay just as an insurance company charges you a premium for your auto. Same thing for cyber insurance. You pay on a monthly, quarterly, or yearly basis. It used to be so cheap, it was a rider. It was like $50 a year for a couple of $1 million. Now it's significantly more expensive because of ransomware and all these other new viruses and nasties that are out there, shall we say. But the idea is that the cyber insurance will make you whole after, or at least soften the blow of the cyber incident. Okay, that's cool. Does it really? Number one. Does it cover enough that it matters? Number two. Are the exclusions horrifyingly bad? Hint, they are. Number three. The list of questions goes on. And I think we really need to take a look at some of these because there's a lot of very confused people out there. and cyber insurance is listed by name in certain compliance standards. I don't know. Is there any that you know, Jeff, that is listed in?
Actually, to be quite honest, no. The one that you're trying to make me say, there is no mention of insurance in it.
There isn't, but I noticed that a lot of the cyber, but I see a lot of cyber insurance policies have PCI riders in them or supplementals.
Yes. He said it.
I said it. It's fine.
He said it. Time to
drink. Everybody drink. But it is. There are some for HIPAA, and I've seen some for PCI. So there are some specific riders specifically around a couple of the regulations, which I noticed in some of the policies.
I'll say this about PCI. I'm sorry, Josh. I will say this about PCI. I've seen a lot of PCI marketing and ads for cyber insurance, as Matt's alluded to. The holy grail or the hope and dream of cyber insurance in the context of PCI is it's a cheaper alternative than paying for all the things that you have to do to become compliant. And if you can't somehow wiggle your way out of PCI compliance or reducing your scope enough, we'll just throw in the towel and get a cyber insurance policy as an alternative to investing in the security things you need to do to have a solid security program.
But this is where things get right. But this is where things get really interesting, because I think the topic we have to talk about is what's included and what's excluded, right? Yep. In these different policies, because the concept you just laid out is I can transfer all my risk to a cyber insurance policy. Actually, you can't, I don't think, because there's enough exclusions included in these policies where if I don't do the basics, I'm not going to get covered, or the coverage gets reduced substantially, right? So there's this misnomer out there that cyber insurance is the saving grace. If I don't want to do all this stuff, it's actually not true.
Well, I think it's a two-parter. Hold on, I'll get to you in just a second, Scott.
Yeah, go ahead.
I think there's a lot of insurance companies that will probably accept your premiums and let you pay for the insurance. It's when you come to filing a claim, is that where you're really going to find out, oh, crap, I'm not going to get what I think I'm going to get in terms of an insurance claim because of the things that we're about to talk about. Go, Scott.
There's two instances of that.
It's funny.
Okay, I'm sorry.
Your name isn't Scott. You hold on. It's funny that we're talking about compliance driving cyber insurance, right? It really should be the other way around, and we're not taking that approach. Insurance companies should be dictating which compliance sets organizations that are buying premiums from them need to hit, right? There's this flip-flop in the industry, right? It's almost like everybody said, well, PCI and HIPAA and all of these compliance sets first, and then bring in cyber insurance, when really it should be the cyber insurance that drives the compliance.
Well,
right?
The problem with that, Scott,
it doesn't work like that.
Well, the problem with that, Scott, is that they don't know how to price their risk. The cyber insurance companies don't understand how to price their own products because, really, it's a very nascent. It's in its infancy, and the problem is that they don't understand the risks. They don't have actuarial tables. I mentioned auto accidents before. If you get in an accident, with your car, you're more likely to have a second one. Not that you're a bad driver. It's just anybody who gets in an accident is more likely to have a second one. So it's time to raise your rates. But does that hold true in cyber incidents? Or is it that once you have a cyber incident, you're more likely to spend money to actually protect yourself against it, so you're not going to have a second one? It's very confusing. So what you're seeing is cyber insurance vendors, the cyber insurance companies, and they're using exclusions, as Matt mentioned, and they're using, and some of these exclusions are so bad you could drive a Mack truck through them. They're using very careful investigation afterwards. They're using the policy as a weapon against the actual claimant. The two cases that come to mind are public. Zurich Insurance actually said that there's an episode of NotPetya that they claimed it's an act of war. So it goes under, I believe it's the force majeure clause, and they refused to pay out. And I don't know how that's ended, and I apologize, I'll look that up. And the other one is Cottage Health, where they had one compliance regime in the policy and they performed another one in actuality. And so the insurer said, sorry, not going to pay out because, well, you didn't do what you said you were going to do.
Right. It's like signing up for cyber insurance saying you're going to meet PCI, but you're a healthcare company, so you really care more about HIPAA than you do PCI. So you do HIPAA, right? and now you're not meeting the bottom line, right?
Right. So it's a very difficult situation we're in. We've got insurance companies that are getting told, hey, you need to sell us insurance. I want to pay you money for insurance. And as any business is, they're like, oh, well, we'd like to take your money. How do we take the money but understand the risk so that we are arbitraging risk properly? And that's something, it's difficult for them right now.
It is,
I only
because
know one company. Go ahead, I'm sorry.
Yeah, I was going to say, you're right. It's difficult because the question is, what's the baseline I'm comparing you against? I don't have the actuarial tables robust enough to really price it. So you see a wide variety in these applications on what gets asked in as inputs into pricing a policy, right? Some are very basic, but I have seen some that have evolved and gotten more advanced in what they ask, because they really are trying to understand how should they price the policies better. So there are bad cases out there, but there are some decent ones evolving that I've seen, because I've worked with a couple of these in some of my advisory work, where I think they're getting a little more mature, but I think we're still a long way away of understanding that whole, what do I ask, and then how do I use that to actually price and minimize the insurance company's risk, because they have to worry about the payouts at the end of the day.
Listen, and speaking of actuarial tables, right, there are at least 4 things that most of these tables should be defined by, right? And that's external incidents to a corporation or an organization getting the insurance, internal incidents, the compliance sets, and periodic performance of audit, right? What are you doing to minimize your risk to not being breached, not being owned, not having an internal issue that takes down a money producing system, right? And how are you translating this over to stakeholders, shareholders, and the like? Unfortunately, we don't see that right now, and it's really sucky on the cyber market that we have to deal with really bad insurance. This is a heated topic, and how we go about defining what that looks like as we move forward in these dark waters, right, is really going to be key.
Yeah, there's this interesting balance, I think, in the application process that gets challenging for who's applying, the company applying, but also for the cyber insurance, the insurance companies themselves, right? How much is enough? How much is too much, et cetera? That's why you see this wide range of what these applications look like. One of the most advanced ones I've seen is actually Marsh's cyber questionnaire. It's 300 and, hold on, I'll tell you exactly because I have it open in front of me. They ask, by default, there's up to 300 and something questions. It's 325 base questions for the policy. And then if you have a HIPAA rider or a PCI rider, because they make riders for these, then there's additional questions for the supplementals. So, if you're doing it all, you're probably around 350 questions. That's a pretty extensive assessment in the application process to try to figure out what the company's doing to price a policy. But I've seen others that are like literally a single page, maybe a dozen and a half questions, and that's it.
We got you beat. We ran into one that was one question. Do you have a firewall? And we said, does it matter if it's on the shelf or plugged in? They're like, no, we don't care. Okay.
Yeah. How much were they offering for that?
What's that?
How much were they offering for that questionnaire policy basis? What was it, like $1 million policy for that one question?
It was $1 million. It was a $1 or $2 million policy for like $100 a year or something. And all they asked was, do you have a firewall? It was like, oh, dear God, you have so much farther to learn and go. I want to point out that your point about the questionnaire is interesting. That's the largest questionnaire I think I've seen, is the Marsh's, that online cyber assessment tool they have.
Yeah.
I only know of one company that actually tried to put together a cybersecurity assessment team to go out and do assessments, penetration test, compliance assessment, et cetera, of potential clients. They put this team together. They were in the middle of sort of working to get them integrated, training them together. And then the whole team got hired off by a penetration testing firm. So it's very tough for the insurance industry right now.
Interesting.
So let's try to sum up some of these initial thoughts. What I'm hearing so far is they're twofold. There's a lack of maturity in terms of insurance programs that are offered, perhaps. And I'm trying to put a positive spin on this. And for companies that are seeking or interested or considering cyber insurance programs, it's sounding like the maturity of those companies in terms of their security program makes a difference on either A, what type of policies they go after, or B, simply whether they really qualify for the policies, especially in terms of actually filing a claim later on if and when they do encounter some sort of breach. Is that a fair summary?
I'd like to add something to that.
Well, please.
Part of the problem is also
that's why we're having this discussion, Josh.
Well said, sir. My apologies. Part of the problem is something we haven't talked about yet, and that's third parties. Mm-hmm. For example, in PCI, I'll go to something you're very familiar with, Jeff. If let's assume there's a breach of credit card numbers, okay? Mm-hmm. And so there's forensics, there's direct costs, there's all kinds of costs resulting from that, including not just it's the QSA CF. Am I saying that right?
It's PCI Forensics Investigator.
Thank you. PFI firm that has to come in. But there's also the fact that the banks can start doing back charges for replacement of cards and all that kind of stuff. It can add up to actually more than the cost of the forensics. There was one case I saw that it was about $2 million in costs, and then the forensics, all the third-party banks and everything else dropped a $3 million bill on them. And they're like, and your insurance is gonna have to pay. And like, whoa, we never thought about that. That's not part of our insurance. Oops. Mm-hmm.
Yeah.
So third party,
and that's not even where I thought you were going with third parties. I thought you were going to, bring up the fact that sometimes the data breaches are facilitated by a third party relationship. To which I was just going to simply point out that in the rush of a lot of companies that are trying to minimize their costs of actually going through PCI compliance, one of the common methods is to outsource as much as they can to a third party.
Right.
And the caution that I always give is you might be able to outsource the function, and you might have a company that's claiming that they're PCI compliant and they're taking care of all of it for you. That doesn't, in most cases, and I can think of little to no exceptions, alleviate you from the liability if there is ultimately a breach.
Yeah, well said.
Yeah, I mean,
you make a really good point, and you say, and the point is that cyber insurance cannot and should not be seen as replacement for a properly developed cybersecurity program.
It is to augment a program. Jeff, to your point, the regulators have made this clear for a long time. You can outsource a function, but you can't outsource the risk and therefore the liability associated with those third parties, right? And you're going to have processes in place to validate your third parties, right?
Right.
But cyber insurance needs to be looked at as a way to augment your existing security program. There are certain things you should be doing. There are certain things that you may want to transfer some risk. And that's what insurance is for. Insurance is a transfer of some risk. You can't transfer everything. There's some acceptance and there's some things you're going to have to do yourself. You can't transfer everything. And I think that's the one misnomer with cyber insurance is they're like, look, I can just transfer all the risk in my program. It doesn't work that way.
Yeah, and I hear what you're saying, but somehow I think the words are falling short. I don't see it as much of a transfer of risk. It's who's going to pay for it. I mean, where do the funds come from to cover the costs associated with a breach? And we've talked about some of the different ways that it adds up in terms of forensics, in terms of investments that you have to make to correct the deficiencies, which typically means you're going out and buying more product, or maybe you have to train people or whatever. If it's a PCI card breach, you might have to cover the replacement costs of credit cards. Typically, that's I don't know if the price has gone down, but it's anywhere from about $20 to $40 per card. So when you hear of a large retailer that's losing 10 million cards, that's 10 million times $20. That's if they have to cover the replacement costs. And then on top of that, there's also fines that might be levied against them by the card brands or the payment processors. So, and the intangible of lost consumer confidence, lost revenue, and the cost that is incurred when you're replacing all of your C-level people because somebody's got to get fired, and you have to go out and find somebody else. So there's all sorts of costs that get factored into this, and an insurance policy is, in this context, I try to simplify things. It's trying to come up with a way of, okay, if this happens, we have whatever the policy is, $1 million, $10 million funds to cover some of the costs associated.
Yeah, so we've seen some interesting cyber insurance ransomware cases last year, right? Where I think one of the things that was interesting in the early part of last year, you saw these ransomware attacks at municipality, city, state stuff, and you saw payouts of ransoms through these cyber insurance policies. Then you started to see the ransoms go up. And then you saw people going, wait a minute, my cyber insurance isn't paying that ransom because I didn't take out that much money. The ransomware guys got really smart and said, look, if they're going to pay out, we're going to ask for more. And then you started to see a shift towards late last year where a few municipalities decided, look, we're not going to pay the ransoms. Or they tried to negotiate based on their cyber insurance policies rates. And at the end of the day, decided not to pay the ransom and try to recover systems. So there was this really interesting trend last year. But in response to that, what you're going to see, and this is what you're starting to see now, is insurance rates are going to go up because now they're starting to pay out. And they're like, whoa, we didn't expect to have to pay out these kinds of rates for these policies. So now you're going to see those premiums start to tick up.
If you are a cyber manager and you are listening to this podcast right now, you really need to be going back to your organization and saying, okay, what insurance are we paying for? What are the riders? And thinking to yourself, how do I test the efficacy of the controls? Right.
And by the way, if you haven't done that with your internal counsel, you're causing problems.
Oh, you're asking for major issues.
Well, your internal counsel or your external counsel better be sitting down with you and discussing those exclusions, the policy, the risks, the potential costs, the liability, where that liability is hedged and how it's hedged, who's holding those. If you don't have your risk model, your threat analysis, if you don't have these things done, you literally cannot even have this discussion.
And I think part of the problem is the security and compliance folks may not be in those conversations. Legal could just be doing this themselves as part of, because they're paying for all the other insurance products, right? They're paying for property and casualty and all this other insurance, and they're just saying, hey, we can get a cyber insurance rider on our property and casualty, just add it on without any discussion with the security and compliance folks at all to understand what's included, what's not included. So there's this sense of protection, but maybe not really when you look at the details. And so this conversation needs to happen because I think a lot of us are not involved in those conversations because the legal team or whoever is just buying these riders because they're just part of their other policies.
So what I'm hearing,
what the legal teams.
Hold on. I'm usurping because I am the leader here. What I'm hearing all of you guys saying is sort of assuming that a lot of companies out there today already have the cyber insurance in one way, shape, or form, whether they know it or not. I was wondering if the initial conversation shouldn't be, to sort of piggyback on what Matt's saying, getting the right people together within an organization, the right groups involved, and having a discussion about whether you should have cyber insurance as part of your, normal business operations or your normal business planning.
Jeff, let me throw that back at you and Matt for a second, because you guys have been in a lot very large companies and done this for some very, very big groups. Scott and I have done it for some big ones, but how many companies have you been at, in, part of, around, consulted to, whatever, that had a risk management committee or a risk group or something of that nature?
Most of the large ones do. I mean, if you're talking Fortune 500, I think they all pretty much have one. I think the challenge is when you get below that line, out of the large enterprises, you don't see them on a regular basis. One of the things is I've been going through our surveys, right, looking at our audience demographics. You got the large enterprise, which has a very different set of maturity and capabilities. And then you go to the other extreme, the second largest audience that listens to us is small to medium businesses. They don't typically have these types of committees or groups in place. And so there's a wide variation depending on where you kind of sit on the size.
Mr. Alderman, CEO of Security Weekly, do you have a risk management committee?
We don't. It's kind of me and Paul. So I'll tell you right now, we have a rider in our general property insurance that has a cyber insurance component to it. Because it's there by default. They add them into the base policies. I know that for a fact because we just went through the renewal process, right? And that's how this is happening. I'm just telling you, this is what's happening is when you're out getting your basic overall insurance policies, cyber insurance riders are kind of added in there automatically for most organizations now, yeah.
Did you have an option for a cloud rider?
For a what rider?
A cloud rider?
No.
How about a CC rider? But I digress. So what I'm hearing, and I agree with Matt's response. Large companies, they have somewhat of a formal risk program in whatever form it takes, and I especially enjoy hearing some of the demographics because a goal of our show, I think, is to try to help the SMBs figure out what to do with limited resources and try to sort out what they should and shouldn't be doing. So in that context, it sounds more like, given that they may have a cyber insurance rider provided to them free of charge by whoever in their company does that for them, maybe the conversation needs to shift to how do you make sure that you get the most out of that insurance rider or can take advantage of it and actually file a successful claim, God forbid, when the occasion arises. And I think that's when we go back to the conversation of, what qualifies you or disqualifies you, which from a PCI perspective, I told my customers back when I was actually doing the actual assessment work, look, if you want an insurance rider, think about any time where you've tried to file an insurance claim, whatever kind of insurance claim. Insurance companies don't want to pay out. Insurance companies want to find reasons not to pay out. If you think I'm hard now as your assessor trying to put you through the ringer of are you doing all these basic security things that you should be doing anyway, what do you think the insurance claims adjuster is going to do? He's going to come in and say, let me see your PCI compliance. Let me see your ROC, your report on compliance, or your self-assessment questionnaire, and let's try to validate what some of your responses are. Are you really doing the things that you're supposed to be doing? So in that sense, the answer to the question, what should you be doing, if it's in the PCI world, follow PCI. Yeah. And if you're doing it and doing it right, you will be well suited or well qualified to file a claim if and when the need arises.
The perfect example of this, Jeff, is the PCI supplemental rider in the Marsh applications, 25 questions. The first few are kind of revenue based, but when you dig in, it's like, is data stored encrypted? Is it tokenized? Are you implementing malware protection, log monitoring, IDI? These are the controls right out of PCI, right? They're asking if these things are in place. And if you're answering yes, and then you go into forensics and these things aren't in place, guess what? That whole supplemental rider, they're going to say, look, you said it was in place. It's not in place. I'm not paying. But that's what they're asking for.
I bet you, I'm going to put money on it, that is a point-in-time document to say, when
of course it is.
Signed up for it, you said you were doing this. We haven't come back in 3 years of re-ups and actually checked it.
We're just some of this has to be. Now, I know for our policy, for example, I have to go through and reapply every year and update the answers in that. So we do it on an annual basis. But to your point, Scott, it is a point in time. Everything's pretty much a point in time in some respects, right? Is you're going through, you're answering it. But is part of our application for our renewals, I have to go through and update a lot of those questions on the application to make sure they're current as of the renewal. So they are probably happening on an annual basis. But again, what's happening the other 11 months of the year? Are these things actually being done, or are they just being done when you answer the question?
So this is probably not the best forum to make this statement, and I will repeat it often, but I had this thought the other day, because PCI is very commonly referred to as a point-in-time assessment, and that's always bothered me, and it occurred to me, or to try to put it in more succinct terms, no, it's not a point-in-time assessment. PCI is an annual process that you go through to attest, to say we are doing the things that we're supposed to be doing. And when it's an annual assessment with a QSA like myself coming in, I'm looking at everything you've done over the previous 12 months, not are you there today, but have you been doing the things on a quarterly basis for each of the last 4 quarters? Have you done the twice a year reviews? Are you doing the annual things? Are you doing the things that you're supposed to be doing every day? Are you following your processes for the things that are one-offs, like installing a new system or something like that? Are you following change control procedures? So the annual thing is annual attestation. It's not annual compliance, but we throw these words around and people assume we assume that everybody knows what they mean. We assume that everybody has the same definition for these terms. But PCI, as an example, is an attestation, an annual attestation. You're signing off, your company executives are signing off on the fact that you've been doing security for the previous 12 months.
So I'm gonna push back slightly. It's a point-in-time assessment. It's a point-in-time assessment.
Say that again.
Well,
okay.
No, PCI is an attestation.
It's a point-in-time assessment of the process for the previous 12 months.
Yes.
No, it's not.
Auditable repositories.
No, assessments can happen at any time. There is an attestation. In the big one, it's called it's a report on compliance, right? There is an attestation behind that whole process, right? So the assessment typically happens before, so you can fill gaps, so you can be attested against those controls that are in place. But it's terminology.
A lot of times that's done in stages, absolutely. And we've built out, I built out one yesterday to do an overview assessment of a company so that we can help them understand where their problems are before we go basically delve deeply into the company to find out have they fixed them and what deeper problems are there. Do this in layers effectively.
Right.
Jeff, effectively, I'm agreeing with you. Okay.
Well, good. You should.
Even though you're slightly wrong, but
I'm not wrong. Everybody calls it a point-in-time assessment, but I'm trying to emphasize
the assessment is a point in time.
The assessment is usually a 3-month process, so the point is huge. It's not a little bitty point. We're agreeing. It's a process. It takes time to track it and
what it should
discover
be,
everything.
But it's wrong inherently in that it should be a continuous assessment rather than a point-in-time assessment.
Continuous monitoring. Oh, Jeff, back to those days.
Wait. Isn't that what auditable repositories are for?
No, auditable repositories are for checking that things are being done correctly.
Evidence.
Correct.
Well, that's the point I'm trying to make, Josh. You come in once a year, however large the time period is that you're calling a point, and you're validating that the company, that the organization has been doing things continuously throughout the previous year that they're supposed to be doing. So you say potato, I say potato. Let's take a break and come back and talk cyber insurance news.